Know what is a Bitcoin? Actually, Bitcoin is a cryptocurrency and was actually the first cryptocurrency to ever be introduced in 2009 online. Why you might have heard this term more and more frequently? Well, actually, over those recent years, there have been a new trend where more traders and more investors were actually interested in investing in cryptocurrencies, and especially in Bitcoin. Although, is it safe to invest in Bitcoin? Is there actually an efficient market behind Bitcoin? Meaning that can we actually use our trading skills in order to trade Bitcoin? Following question. Could Bitcoin be considered part of an efficient market?
In order to unveil whether Bitcoin is efficient or inefficient, we had to employ highly powerful tests. These 5 tests were LJungBox Test, Runs Test. We didn't use Bartle as it was very similar to Runs. AVR Test, BDS Test, and RS Hurst, which is the Hurst exponent. So basically, the first one, the LJungBox Test, it just tests whether a time series show correlation to itself in different lags. And what does this imply? Basically, the null hypothesis is that there are no autocorrelations with other lags. If there were, box test by using the Accor LJungBox library from the Statsmodel. The library we used was Runs Test, which tests whether a data set is random process. Again, this concept of being random or not. If we fail to reject the null hypothesis, it means that the sequence is produced in a random manner, therefore the time series is random. As well, this one we use the Statsmodel sandbox stats runs, which is made for this type of test. The AVR test. This test examines the possibility of predicting a time series by comparing many variances of the data picked at different intervals. And in fact, the null hypothesis is that the dataset again is random. These 3 tests are very important for the addressing of whether the Bitcoin and other cryptocurrencies are efficient or not. And these ones we just used the variance ratio and we found the p-value. The BDS test instead is used after feeding a linear model onto a time series and to test the null hypothesis or whether the residuals are distributed independently or not. If the null hypothesis is rejected, it means that the residuals are not independent, meaning there is no underlying structures. Lastly, we have the Hurst exponent, or RNS Hurst, and which tests whether a market behaves in a random trending or mean reversion manner. Here you don't have a null hypothesis, but you have 0.5, it means that the market follows a random walk. Now if it's equal to 0.5, it follows a random walk. If it's above 0.5, it's a trending behavior, and if it's lower than 0.5, it's anti-persistent behavior. Now I'll pass it on to my colleague.
Okay, now, so let's check the results of the 5 tests. And firstly, when looking at the results of the Hurst test, we can see that for the 3 samples, they actually have an anti-persistent behavior. Although, when looking at the 2 tests for LJungBox Test and Run Test, especially for a more recent sample, which is from 2018 to 2020, we can see that actually they failed to reject the null hypothesis, meaning that the time series doesn't have any correlation and that it is produced in a random manner, meaning that actually there seems to be an improvement in efficiency of the Bitcoin, especially in more recent years. Throughout the analysis, we came to the conclusion is that now currently the Bitcoin isn't 100% of market efficient, although we saw that in the recent years that actually the Bitcoin seemed to have an improvement and seems to go towards the market efficiency. And we think that compared to previous studies is that we agree on the idea that the Bitcoin will actually become more of a market efficient as more traders and more people from the world of finance will go towards Bitcoin and other cryptocurrencies. This is for nothing that recently Ellon Musk stated that Bitcoin might be already on the verge of being market efficient and that he invested 1.5 billion in a cryptocurrency.